Money FM 89.3, best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Welcome to the U.S. Markets Wrap with me, Ryan Huang. So taking a look at the latest session, we've got some green on the screen. The Dow up 0.6%, around 250 points. The S&P 500 rose 0.6% to 5,664. And the Nasdaq Composite advanced 1% to 17,928. So this all comes after President Donald Trump announced a trade deal framework between the U.S. and United Kingdom, the first major agreement hatched since the U.S. launched preemptive tariffs on most of the world earlier this year. So for more insights, we are joined by Laila Pence. She is the president and co-founder of Pence Wealth Management. Laila, thanks for joining us as usual. How are you doing?
I'm doing great. How are you?
I am doing awesome as well, Laila. So let's get into it. And I suppose we have you on a good day because markets are on the up right now. And this comes off the back of some of the tariff tensions starting to unwind with a deal on the table. Walk us through what you're seeing right now.
Well, I'm seeing, that the market doesn't like uncertainties. And when, people are uncertain about earnings, uncertain about tariffs, the market sells off. And now we're starting to see some certainties. This is, the last few weeks there's been rumors that there's going to be deals made and that there's deals negotiated and, that harsh Liberation Day tariffs are not sticking because those were just like the first numbers that really scared off and caused the market to go down dramatically back then. And since then, things have been getting a little calmer, heads prevail, and companies have been talking and telling, the world that this is not sustainable. And I believe the president, he knows this is going on. And now we're going to start seeing every couple of days, we think, some sort of deals. And as these deals come in, it gives a framework for other countries to have similar deals. And so we think things will, have more certainty. And as we have more certainty, we're going to have a pretty good market.
Laila, how much pressure is there for the U.S. to reach deals? When you look at the data, at the economy, everything that's going on, how much do they need to do this in terms of how much has been kind of eating their own economy?
I think, we certainly import way more than we export. So, and that causes an imbalance. And so there's more pressures on the other countries that where they have a lot of GDP tied into the things they sell to us. So different countries have different pressures. The biggest one, of course, is China. There's 7 countries that really have predominant of the trade, and the biggest one is China. And, of course, 145% tariff is not sustainable for them or for us. As the Secretary of Treasury said, it's really more like an embargo. So we feel that, the other 6 major countries, they will start coming into focus and into play, and there's a few weeks to go and maybe even a couple months to come in with some trade deals, but they're all pretty much anxious to make deals, and I do believe there's pressure on both sides, but there's more pressures on the other side to make deals because our economy is still very strong and we could withstand a bit of a downturn because of the tariffs, because and the other side that no one has been talking about is the fact that we're going to have huge tax cuts. The tax bill that we have in Congress, that's already most of the framework has passed the House and the framework that has passed the Senate, and then there'll be a reconciliation, and that will provide $1.5 trillion of tax relief over the next 10 years, in addition to extending the current tax rates that we have. And so if the tariffs take away earnings or take away monies from people's pocket, the tax bill and the tax relief will give them some money back. So the U.S. does in a better position because there is an offset coming with the tax bill to offset the fact that tariffs are should probably have some price increases depending on the company and the product. But at the end of the day, the U.S. does a lot more service than they do manufacturing. And so we're not as dependent on the manufacturing. But, of course, it is going to hit some companies and it's going to hit the U.S. and slow down somewhat, but not to the extent the market made it out to be just a few weeks ago.
Yeah, so that tax bill could go some ways to putting more cash in the hands of consumers, which is going to be good news for companies. Talking about what's happening on the earnings front, we did get to some degree better than expected numbers, a lot of beats we've been seeing, but at the same time, some folks feeling more cautious about the outlook. What are you taking away from the latest earnings season?
Well, we expected the earnings season for earnings to only go up by 6.6, and they actually grew by 12.5. And 75% of companies have beaten earnings, and some of them were not able to forecast earnings because of the tariffs, and some of them did forecast potential very good earnings because they're not as affected of tariffs. So, which is one of the reasons the market has rebounded since earnings season starts, because companies, like I said, 75% have been earnings. So companies are still making very good money, and it's double what we expected. And that, with the relaxation of some of the tariffs and the tax bill, has really brought the market back from April, where it was pretty bad. April 9th, I believe, was kind of the low of the markets, and things have been getting a lot better because we're seeing clarity. You know, markets hate uncertainty. We're starting to see some clarity, and we're starting to see how the second half of the year is going to get better, and potentially also some interest rate cuts from the Fed.
Yeah, I imagine these tariffs and what's going on elsewhere around the world is having different levels of impact on different sectors. So to that degree, which are the more attractive places for you to look at more closely these days when it comes to parking money?
Well, we really still like big tech and AI. We think that they really got hit the hardest because they had done so well last year. So, you know, they got hit the hardest when you have margin calls and so forth. People sell their biggest holdings first. So those companies, and actually have the most earnings, got hit the hardest. We do see value there. Some companies are down substantially from their high, and so it's giving us an opportunity to those holdings, and those have, you know, we think the AI revolution is as big as the light bulb was, you know, when it's changed our whole world. It's that big of a change to our world. And anytime you can buy, you know, and add to your portfolio anything to do with AI, we think it's a very good choice. And but you have to be patient. You know, I love Warren Buffett's quote when he says that the stock market is a mechanism to take money from the impatient and give it to the patient, something of that sort. And so in the market, you have to be patient, and this is a time to, you know, look at what holdings, what areas would be good. So we really still like that. And then we also like defense stocks. They have not participated as much in this market, but now there's a lot more countries that are going to have to spend money on defense. And even the U.S. was projected, instead of $850 billion, expected to go to $1 trillion in 2026. So the U.S. is spending more money on defense. The rest of the world is spending money on defense. And if you notice today, in the UK deal, there was some deal that the UK would have to buy more defense from the US. So that could be also something that will be something that other countries may want to put into their deals that they are making with regards to tariffs. And then we still really like the weight loss drugs. We think that the amount of usage is just going to increase. Right now, there's 5 million people that use weight loss drugs. We expect it to go to 50 million, and especially once you have pills instead of shots. We think this is an area, and lately they have had a little bit of a retracement because there's talk about, drug pricing. So their stock has gone down a little bit. We think this is maybe a good opportunity to add some in those areas.
What about competition in the weight loss drugs scene? Because I've been seeing or hearing about a lot more drug makers jumping on board, and even generic drug makers.
Well, the demand is so huge. And so the whole world is going to be using more of that. But certainly there's certain companies that are the leaders, and so we're not as worried as much about competition. We're just worried about pricing and availability of the drugs. And also where it's a lot easier to have a pill as opposed to a shot where it has to stay in the fridge and it's just not as comfortable as someone taking a pill. Once there's a pill, I think that's going to be a game changer.
All right. Weight loss drugs, big tech and AI, as well as defense, some areas to look at more closely these days. Great snapshot of where we are right now of Laila Pence. She is the president and co-founder of Pence Wealth Management. Laila, thanks for your time today.
Thank you.
Always great chatting with you. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.